Hello and welcome to everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. In the glow of Dhanteras lives, let's reflect on the historic journey of Indian markets. In summer 2079, Nifty touched 20,000 on September 11, 2023 and Sensex surpassed 67,900 with both the indices gaining around 6% during summer 2079. However, the real outperformance, as you'd all know, came in from Nifty Mid Cap and the Small Cap Index, which gained around 24% and 31% respectively. The upmove in the market was exceptional considering the Russia-Ukraine war, Israel-Hamas war, and of course, high global inflation, rising crude price, and peak US 10-year yield and consumption slowdown. But how do we navigate summer 2080? What are some actionable ideas for summer 2080? This Diwali, we bring more than 10 actionable ideas to kickstart your summer 2080, curated by our panel of 3 experts. Deven Choksi, who is the Managing Director of DR Choksi Finserv, Siddarth Bhamre, who is the EVP Research Head at Religare Broking, and Shrikant Chauhan, who heads the Equity Research for Kotak Securities. We also have a roundup of sorts later part of the show from Rahul Arora, but let's get started with Deven Choksi first. Religare Broking. Well, your top 3 picks there, and of course, a small request if you could, make it a little more crisper so that our audience could capture it all.
Sure. Firstly, thanks, Nikki, for having me on your
Pleasure.
show. And we wish, from Religare Broking, happy Dhanteras and happy Diwali to you, your team, and all the viewers. So we are playing with safes, and hence we have all 3 large cap names. And TCS is the first name which I would like to talk. Now, one thing before I talk about TCS, the overall industry, Nikki, it's been like 2-3 years we are listening that US will go in recession and IT will have a problem. And that's the reason IT stocks have underperformed in last 1.5 years or so. But last couple of quarters, despite negative news, we are not seeing heavy corrections in these names. You need to understand that either you will have a valuation support or you will have cushion of high growth. Both cannot exist together. And right now, IT has valuation support and growth will follow because there's a lot of transformation which is happening because of digital space and of cloud technology. And we believe that orders is not an issue. There is some execution delay. And TCS, why TCS? Because TCS is least volatile in terms of predicting their earnings, or be it on the margin fronts or be it on the growth front. And at this point of time, TCS is available at around 21 times valuation 1 year forward. And very rarely we see a brand like TCS available around 20. Good valuation support, order book is strong, and barring coming 1-2 quarters, we believe that again the trajectory of growth would be higher. Plus, attrition ratios have come down from 21-22% to sub 15%, which was the problem in IT space. So I believe all factors, barring this overhang of macroeconomy, we believe TCS is a good addition to a long-term portfolio at this level. The second stock I want to talk about is Maruti. We also had this stock in our previous somewhat, and we continue to maintain it. Maruti firstly has stopped, reducing its market share. It came down from 52 to 43%. One thing I want to say more about industry, earlier, Nikki, it used to be that if you're launching more product, then there will be room for higher growth. I think for some time to come, the situation has changed. It is not just about launching new product, but it is also about the ignition system, the fuel type transformation, which companies are doing, like EV or from petrol, diesel to CNG. So Maruti no more has diesel cars. A lot of people are talking about the EV, but we are quite optimistic of Maruti meeting its numbers through sale of CNG vehicles. So all its models are now coming, at least the entry level to mid level are coming in CNG segment, and Indian audience is very welcoming towards CNG. So I believe falling metal prices, falling commodity prices, growth rate to be strong. Maruti is a decent buy. TCS also we have around 20 to 23% upside. Maruti also from current levels we are expecting 23% upside. Again, valuation wise, there's a valuation comfort to Maruti. It's available at 22 times, and we are expecting around 27 times multiple we are giving, which brings our target to somewhere around 12,700. The last stock, Axis Bank, you can't be bullish on markets if you don't talk about financials. Why Axis Bank? Why not HDFC or ICICI? Because Axis Bank is outperforming. We are seeing a decent growth. In fact, the growth is higher than industry, other peers. Also, the acquisition of Citibank customers is adding good cushion to the margins. Where other banks we have seen declines in NIMs, we have seen Axis Bank holding to its NIMs of around 4.1%. The CASA of customers acquired from Citibank is around 70-75% or so, or more than that. So I believe growth trajectory, wealth management business, credit card business are doing pretty well for Axis, and that remains a preferred pick in banking space. We don't have very aggressive target, but 14% upside from current levels. So these are three names: TCS, Maruti, Axis Bank.
Pretty much it, but I have two follow-ups for you. Typically for TCS, where you made a good point where you spoke about the valuation perhaps, and you also spoke about the growth profile. Both cannot be matched together, but a bit of concern for TCS is that despite bagging incremental large deals signed by the company, the double-digit growth really isn't likely to come anytime soon for FY25 also, according to most of the brokerages. You think the company will need a combination of cost takeouts and digital transformation deals? How soon you think this could be achievable? If not for this year, then FY25, do you expect the growth to come in by FY25 in that case?
See, I don't think so. Anyone has answer to that, and we all have wild guesses. What is working in companies' favor, Nikki, is, or as far as I would say for the entire industry, is that 1.5 year back, there was a lot of margin pressure because the cost of employees was going up, and that's the key cost. And that is reducing. So despite top line not growing very significantly, we haven't seen any significant pressure on margins. And I accept, and that's the reason valuations are available at these levels. That for next probably 2-3 quarters there may not be a significant growth, but one needs to understand that this growth is not because there are no orders. People are, clients are delaying because of uncertainty in macro environment. And we will not get into it that why there is uncertainty. We all know that. And that's the reason valuations are cheap. So I agree to it that growth will not be very significant in coming 2-3 quarters. And that's the reason stock is available cheap. So we would suggest buy, because as 1 or 2 quarters go by, market would start looking beyond these concerns and again would start giving higher multiples to TCS.
So that point well taken. We are now going to graduate our discussion. Both Deven and Siddarth, please stay on with us. We're again going to come back with 2 more questions for both of you. And thank you for taking out the time. But I'm going to go to Siddarth and check with him what's his advice on what not to do this Diwali.
Nikki, so I would suggest don't depend on anyone else or so-called expert to make money or wealth for you. People like us come and talk and we give our advice. You need to listen to us. You need to understand it thoroughly. Go back, do your homework, and then buy it. Means I see that people, if you want to buy a phone, you see so many variations. You see so much of different type of phones, and then you make a decision. And I think same sort of exercise should be done for selecting stocks. Whether it's derivatives, whether it's equity, commodity, or currency, I think everywhere you can make money and everywhere you can lose money. It is just that how disciplined you are. And I think you should now start taking responsibility of your actions rather than blaming any expert or brokers, because we all are learned and we are all now privy to all the information which is available. So take your destiny in your hand, not in hands of broker or experts.
All right, Shrikant, your advice for what not to do. This is a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and of course, happy Dhanteras and Diwali to the family. I hope to the viewers, family, there's a joy, abundance, success in your investment. May the coming year, Samvat 2080, bring wealth and good fortune to you and your loved ones. Happy Dhanteras. we have the